Hey traders, this is Blake Morrow with Forex Analytics, and you are listening to the week ahead video for December 10th, 2023. We've got a lot to talk about today. And yes, I'm actually filming this on a Sunday. So, hey, at least it's going out this weekend, right? There's so much to talk about. I'm going to get into it because we have, I have actually 6 central banks that I'm following this week, and we're going to be looking at their corresponding currencies. We got, equity markets that are testing the highs from the year. We have so much going on this next week, this last week before the holiday season really kicks off. So before I get into that, I need to say that if you haven't tried out Forex Analytics, try it. It's $1 for 10 days. This is a great week to be trying out Forex Analytics. Make sure you download the mobile app. There's no other analysis company that provides analysis for the markets, like FX, equity markets, whatnot, that gives you a mobile app that, has push notifications. So download it so you can get the full experience. Jump in our community through your mobile app. You can do that as well. Also, if you really want to try out Forex Analytics, it's included with the trader funding program. So if you want to learn how to access larger amounts of capital, maybe you don't have access to, a $25,000 account or a $50,000 account or $1 million account, and you want to learn how to access that type of capital and get Forex Analytics along the way, check out the trader funding program. And this way you don't have to risk your own capital when you're trading either. All right, so let's get into, and by the way, you can find out information about those down below. There's a link that I showed you how I passed a trader funding program assessment, which everybody has to. So I share with you the information on how I did it and the trades and the win percentages, so you understand what the process is like. Anyway, let's get into next week. So next week, let's break it down, and we're going to talk about the jobs report actually before I even get into the rest of the markets and what's happening throughout the course of the week. And remember, with these videos, you can actually fast forward to the very end if you want to find out what my best setups are for next week and review the ones that I talked about the previous week, which we will. You can fast forward right to the end. But there's so much to discuss this week. So, like I said, there's 6 central banks that we're going to be that are meeting this next week that I'm following. Then we have stocks at all-time highs, or not all-time highs, the DAX is at all-time highs, but we have markets that are at highs of the year, and we have some major 3-year, 10-year, and 30-year auctions. And I'm telling you guys, we mentioned this. Oh, I've been talking about it throughout the course of the F.A.C.E show with my colleagues. If you go to our daily free show, we've been talking about this, but had this discussion on the trade-off show with Chris Weston from Pepperstone, which is a weekly show that I do with him out of Australia. We talked about this a week and a half ago, like how important these auctions are, and mark down your calendar for tomorrow. The 11th kicks us off. So we're going to talk about that this week and how important those are, even before we have the Fed this week and all these other central banks meeting. We got inflation data out of the U.S. But one of the things that we should also discuss is the reaction to the stock market on the jobs report on Friday. And you can see the S&P rallied to 4610. 4610 is a really key level of resistance. You all should know that. If you go over to a daily chart, you can see right up and towards the highs of the year. We hadn't been this high since July of this year. Now, why are stocks rallying? Well, a couple reasons. Unemployment, the jobs report, the headline number was higher than expected, but also we had the unemployment rate dropped to 3.7%, and most people were expecting 3.9 and possibly 4%. So instead of going higher with unemployment, we dropped a couple 0.2%. That's a really good number. Then you have the University of Michigan consumer sentiment and inflation expectations. Sentiment is on the rise, and inflation expectations are dropping. And I think that's going to feed into the FOMC as we get into the middle of this next week. So that is what I was telling the traders in our chat room. As soon as that data came out, I said, look, that's Goldilocks data. stocks are going to rally because of that. And we were having this discussion on Friday. If you're in the Forex Analytics chat room and you just kind of scroll back to when after the data came out, we were talking about that just being Goldilocks data. And so with that being said, stocks are appreciating that. Now, there was a Nick, the Fed whisperer, Timorous, I believe his name is pronounced that way. He was saying that over the weekend, there's more than likely the Fed's not going to be talking about rate cuts for the next several months, which that brings us to the Fed this week. The Fed this week is going to be pretty critical as far as the markets go and as far as what we're looking for. So we're going to get into that, and let's just kind of get into the rest of the week. So let's start off with Monday. So on Monday, and you guys know I'm going to go into the live charts and back over to the charts that we use here every week. On Monday morning, Norway CPI and PPI is going to be released, and that's going to be kind of an important mover. And I want to share with you the US dollar Norwegian krone really quick, and I want to share with you like this development that you'll see here. And this is like an inverted head and shoulder pattern. You might be able to see it, but I'm going to just make sure you do see it. And you can see like the neckline is really important here. So the reason why I bring that up is because we're kicking off the week with this important data out of Norway. And so you can actually see the critical support is going to be right here at 1082, 1081. Now we've been discussing this all week long in the Forex Analytics community. And you can see the US dollar Norwegian krone. We talk about this critical level of support here at 1082. But the reason why I bring that up is because it has got to be key, because if that inflation data comes in strong, the CPI data comes in strong, we could get back down to 1082 and maybe even break ranks of this move. Now, the flip side is if we get above 11, that's going to be very bullish for the US dollar Norwegian krone. So watch the US dollar Norwegian krone Monday morning. First thing out of the gate this week is going to be CPI and PPI. Now, going into Monday, when you start to get into the North American session, we're going to have at 11:30 p.m. Eastern, 11:30 p.m. Eastern, you're going to have the 3-year auction, and at 1 p.m. Eastern, you're going to have the 10-year auction. Now, I mention this because during these auctions, we've seen some really big volatility, because you're looking for what the take up is on these auctions, how big, or if the tail is really big, the difference between where the bids are at and what the yields are. So it's creating a lot of volatility in the markets. And right now, everybody wants to know, does the market want to own bonds, and are yields going to start dropping as a result? And you can see how yields have come down, but we've shown a little bit of a reversal in the 10-year yield. So if the bond market continues to come under pressure, yields are going to rally. And if yields rally, that's going to just assist the dollar in rallying as well. All right, so that's going to be on Monday. On Tuesday, you have UK jobs data. And so this is going to be one of the first key developments this week is, with what's happening with the sterling. So you'll notice we've talked about the sterling rejecting at the 618 retracement. I can delete all this now. This is from last week. We had talked about all this and how important those levels were. Now notice that we are near the 200 DMA. Okay, so the 200 DMA for me is really critical support for the sterling at this point. You can see what critical resistance is just above 127, but support is the 200 DMA. Now, if we get below the 200 DMA, that probably means that the UK jobs data, at least, on Tuesday morning, the UK jobs data came in weaker than expected. Now, let's stop here for a second and we can delete this previous triangle. You can see that previous triangle rally. And then you'll notice that we have a nice little ascending trend line that comes in around the 200 DMA. Now, my assumption is going to be that's probably near a 38% retracement as well of this whole, well, you can just take the entire move. And yeah, that 38% retracement comes in at 124.74. So what that means is, to me, is if we break below 124.70 roughly, that's going to be a pretty bearish event for sterling. Now, Now, obviously, with everything else that's happening over the next, let's just call it 36 hours from the UK jobs data, you have to be a little careful here because you have US CPI, you're going to have a 30-year auction, then you're going to have the FOMC, you're going to have UK GDP the following day. So obviously, you got to be a little careful as far as taking positions and just saying, okay, we broke one direction or another. There's so many things happening throughout the course of the week that you have to manage your risk. And I'm going to stop here and I'm just going to say this really quick. This is, we are the last really big week of volatility this year. If you are not having a great year, you can make up a lot of ground this year, but you can also really get hurt at the very last week too. So make sure you manage your risk. And if you've had a good year, pare down your position sizes and widen up your stops a little bit. Try not to stay, it's okay to be wrong. It's just not okay to stay wrong in your decisions, especially in a week like this week. So please just be careful, establishing positions throughout the course of the week because all of the different landmines that are going to be happening all week long. Okay, continuing on. Tuesday morning, we're going to have the Euro ZEW. Now, this may not be a big mover, but when you have the German DAX at all-time highs, we have to kind of pay attention to what's happening with this German ZEW data. So what we've seen is the euro slipped, continues to slip. As I talked about last week, my preferred short of the week was the euro dollar on the short side, which I played on the short side. I don't know if you guys did. We'll go back and review that a little bit later. But what you can see here is we're coming down to the 50 DMA, and I would argue that this is going to be some decent support for the euro as we approach these levels. Now, let me get rid of this red trend line here, and I want to highlight this a little bit differently, make it a little bit more visible for you guys. And you can see that the horizontal support right here also coincides with the 618 retracement, and that's just below the 50 DMA. I'm going to just highlight that level because I think if you're really, bullish the euro and you think the euro should be going higher, and you see the COT data coming out, and you see how traders are pushing towards, being bullish the euro, especially a lot of the speculative community. I don't think they want to see a move below that 618 retracement because A, you're going to be below the 50 DMA. B, you're going to be below this ascending trend line. C, you're going to get below the 618 retracement. So, I'm just going to say this 106.65, 106.60 level, very key for the bulls to hold on to. We get below that, we are probably going to trade back towards the 105 level. And then you got the Fed, which... Okay, I can get in a little bit in the conversation right now about the Fed because we're going through chronologically through the week. But the Fed is expected to be kind of dovish here, and we're not expecting a lot of pushback. But, what if there is? I think the market's prepared for a dovish Fed. If the Fed's not dovish, you could see some dollar strength really come through the market. Okay, but I'll go more into that here in just a few seconds. German ZEW data is going to be important for the Eurozone because of the German economy and how fragile it looks, and especially with that DAX at all-time highs, which is still a little bonkers to me. All right, we have US CPI on Tuesday. So let's talk about the, let me pull up the dollar index and let's just discuss it, okay? So the dollar index has this inverted head and shoulder pattern developing. Now, this is the same dollar index that I use this chart with our daily face shows. So this is one of those charts that I draw on here for the week ahead video, but also throughout the course of the week on the free face show, I still use the same dollar index chart to analyze the dollar throughout the course of the week. So I'm in other words, I'm adjusting these lines. Now you'll see that sell-off that we saw on Thursday. That is because of the US dollar Japanese yen that really broke down, which we'll talk about the US dollar Japanese yen in a little bit. But the dollar index actually recovered on Friday because of the really strong jobs report. What that really tells us is right here, this neckline right here at 104.30 is vitally important for the bulls to take out, because if we do take this out, like let's say inflation data comes in a little hotter than expected, that dollar index, a break above that resistance is going to take the US dollar a little bit higher. And then, obviously we've got the FOMC the next day. And if the Fed is not as dovish as the market expects, we could really see a substantial rally on the dollar index. But you can see the breakout point. The breakout point is 104.30. Okay, that's bottom line. Remember, CPI is important. It's coming out that morning. But later on Tuesday at 1 p.m. Eastern is the 30-year bond auction, which is going to complicate things. It's all of these, data point release landmines that are around the market. So just let's say the inflation data comes in strong, you get long some dollars against whatever it is, whether it's the euro, sterling, maybe against the yen, whatever you're doing. Don't leave your computer and without acknowledging that there's at 1 p.m. Eastern, you're going to have a 30-year bond auction that could completely upend the dollar trade or extend it even further. So keep that in mind. Okay, Wednesday morning, we do have UK GDP. I don't think I need to go back into the sterling, but UK GDP, the market is looking for a month-over-month negative print, maybe. And if that starts to show itself, that could lean into sterling weakness. All right. Now, one currency pair I haven't talked about for a while, but you have South African rand. You can see how weak it is. Now, look at this overall trend. And this is an emerging market currency. And imagine this, if we get some dollar strength, and I know my colleague came in, he likes to trade this. I like to trade it as well. I traded a couple weeks ago when it was down, down below the 200 DMA. But you can see we're just kind of consolidating. The reason why this is important, because the big print of the week that's coming out this week, which you can see here, is going to be CPI and retail sales, and then you're going to have actually PPI on Thursday. So you got CPI, retail sales out of South Africa, and any kind of weakness could really, allow for the dollar rand to take a little bit more of a rally here. And check this out, because if you start breaking higher, through here, and let's say that some dollar strength comes through the market. Next thing you know, you could have the dollar rand, testing the highs of the year. The dollar looks good against some currencies, and especially some of these emerging market currencies. I'll go back into I'll actually talk about the Mexican peso in a little bit as well, so make sure you stick around for that. All right. I shouldn't have taken that off. We have the FOMC. So let's talk about the Fed. I'm going to keep it on the dollar yen for a second. And let's just take a moment and talk about all this. So obviously the dollar yen has broken down. All right. Now, the dollar yen is vulnerable, in my opinion, because you haven't seen any pushback from the Bank of Japan, but you had comments from Ueda last week that really allowed for yen strength. So now the dollar yen is on the defensive, right? You can see the 200 DMA right here held as support. It's a 618 retracement. You can see how important basically the 142.80 level is. Now, when you're dealing with the FOMC is going to either be hawkish or not as dovish. Let's put it this way. The market's expecting more of a dovish FOMC. But in other words, the market is not expecting the Fed chair to really push back on all of these dovish comments that we've got from a lot of other FOMC members. So if the FOMC statement and Powell sound a little bit more hawkish, obviously I think the dollar could be played bullishly against a lot of currencies. You look at the sterling as a short, euro is short, Aussie could probably be a short. I'll talk about Aussie here in a second. But if the Fed is dovish and you start to see, the dollar sell off, that means stocks are rallying, yields are probably coming down, and you're probably seeing the dollar yen break back down towards the 142 level near the 200 DMA. You can see right through here. Now, if the dollar yen, if the dollar is weak, I think this is going to be a great currency to be on the short side. And the reason why I say that is you're going to have this divergence in monetary policy. Not only do you have the Bank of Japan that, maybe in the first quarter of this next year, starts to pull rates higher from negative and starts to normalize policy. But you're going to also see, the market continue to price in a Federal Reserve that might actually cut rates sooner rather than later. So you'll have divergent monetary policy between, the BOJ and the FOMC, which means that the dollar yen could really come under pressure. So watch the 142, 142.75. Obviously 142.75 is the 618 retracement. 142 and change, 142.30. By the time we get there, maybe 142.40. And then you look at the spike lows is all around 142. You start getting below 142 and the dollar yen, could peel off a couple other big figures lower on a dovish FOMC. And I said on a dovish FOMC. Doesn't mean we're going to get a dovish FOMC, but if we do, I think the dollar yen, deserves your attention, our attention in the markets. Okay, after we get past the FOMC, don't think the market's done. No, because we have New Zealand GDP. You can see the New Zealand dollar continuing to fail at the 618 retracement. I'll delete this from last week, but you can see this. A lot of confluence around there has offered us resistance. We talked about that last week. That's why we put in, here, and we talked about all of this, congestion around here, around these levels. Well, guess what? It all, held. But you can see the 200 DMA. If we have, a strong, or the dollar starts to strengthen, and we're going to see the dollar really strengthen by this point, the time that New Zealand GDP comes out. But if the New Zealand GDP is weak, coupled with the dollar strength, the Kiwi dollar could be trading back at 59 cents pretty easily. And then right after that, you have Australian employment. So you got the Aussie dollar that failed again. Here, let me move this green line. We failed at the 618 retracement. Let's get rid of this right here. You can see how we're consolidating around this support resistance zone. It's been a pretty big zone that we've been talking about for the last several weeks. We're just hovering around the 200 DMA. I don't think you want to be long the Aussie dollar if you drop back below 65 cents. If you drop back below 65 cents, it's probably fairly negative. But this is also one of the more divergent central banks that you got to pay attention to, because if the Aussie employment comes in strong, right, you have the RBA and Michelle Bullock, who's somewhat hawkish. If you have a strong jobs data, you're going to see that divergent central bank, theme play through. So my opinion is if we can get above 67 cents, so above this resistance right here, it'd be pretty bullish. So I think that the Aussie could be played either way, but the way I'm going to play the Aussie is going to be a little bit differently, and I'll get to that when we talk about the best setups of this next week. So make sure you stick around for that. By the way, before I continue on, if you like these videos and you think they're beneficial, it goes without saying, please give us a thumbs up. For my team, putting these videos together every weekend for the last, 7 years. Even if I'm not here, even if I happen to be traveling or I'm out for the weekend, one of our staff, like Greg Horvat, will pick up the baton and he'll film a week ahead video. If you really like these week ahead videos, make sure that you give them a thumbs up. Jump in the comments down below, and if there's other things that I'm missing that you think I should be mentioning, jump in the comments below and mention it so everybody else can read it as well. All right, so we're going to continue on. On Thursday, U.S. dollar, Norwegian krona, once again, will be in the spotlight because we have the Norges Central Bank rate decision, one of the central banks that is also meeting on Thursday. Now, there are several, so stick around for this. Norway, by the time we get to this point, we're going to see if the dollar has strengthened or weakened. But this rate decision is like 50-50 that you could get a rate hike or they're going to keep rates unchanged. Obviously, that's going to influence the US dollar and Norwegian krona from wherever it's at, because it's kind of a toss-up at this point. So keep that one in mind. Another central bank that is meeting on Thursday morning is going to be the Swiss National Bank. So I don't know where the dollar Swiss is. Oh, there it is. So the dollar Swiss finally found some support around the 78% retracement. Some of you guys know I'm actually trading the Swiss franc on the short side. Well, the market is looking at the Swiss National Bank and starting to think, hey, maybe they might be a little bit more dovish here, signaling a possible rate cut again. So if that's the case, U.S. dollar Norwegian krona could be trading U.S. dollar Swiss franc. I just said Norwegian krona. I'm sorry. Typo. Wait. Verbal typo. Anyway. The Swissy could be trading back up the 200 DMA and the 50 DMA, which is going to be really key resistance. You can see how they are literally on top of each other. Then on Thursday morning, this is even while I'm sleeping, but as I'm waking, we're going to have the Bank of England rate decision. So that's going to be another big one for us to be watching, especially with us, nearing that 38% retracement. The 200 DMA and that horizontal support all coming in right around that 124.75 level, right, that we talked about earlier. Then you have the ECB rate decision. And a lot of people are wondering, is the ECB, are they going to really, are they going to basically confirm that there's going to be rate cuts coming in the future? And this is where, you have to watch the euro, especially on some of these euro crosses that have been weak as of late. You're going to have the ECB decision on Thursday. Now, one more bank decision on Thursday is going to be Banxico. Now, I talked a lot about the US dollar Mexican peso, about it building a base here, and if it ever broke 17, it'd be bearish, which I'll delete here. Okay, and you can see that we're hovering around this 200 DMA. The dollar Mexican peso is still building a nice base, and you have Banxico this week. Now, remember, LATAM central banks are now getting into a rate cut campaign. They were kind of the first central banks to really move into that fold, and Banxico could be more dovish here, hinting that rate cuts are coming. And if that's the case, we could break above the 200 DMA. You can see this 200 DMA has capped the dollar Mexican peso, so above 1760 could be bullish, right? It really could. Now, also what's happening on Thursday night, we have out of China, we have China industrial production, and especially with, we've had some weak PMI data as of late. You're going to have to watch where's the US dollar CNH? I don't know where it is, and I don't know where I had it placed, but let me see if I can find it for you. If not, we'll just pull it up. USD, CNH. Here it is right here. We completed that double top that we've actually discussed that here. And look at this inverted head and shoulder pattern that's developing. Just eyeballing it, you can see it's something that probably you should be watching. Like I said, out of let me go ahead and draw this out for you. So on Thursday night, which will be Friday morning out of China, we have industrial production, retail sales, unemployment rate. Remember, in focus has been their PMIs that have been pretty weak. So you can see this little inverted head and shoulder pattern is in development, and we're trying to actually already break out. But by Thursday, the US dollar CNH probably has moved quite a bit, I would assume. Friday, we have Eurozone PMIs, and then we also actually on Friday, we have UK PMIs as well. And then we have US PMIs, Empire State Manufacturing, and industrial production to wrap up the week out of the U.S. Now, we still have a lot to talk about because I've just talked about like all the major macro and data releases throughout the course of the week. but we haven't even discussed the broader markets here. And we should start off with just talking about the DAX, right? The German DAX, I mean, look at this rally. This has been a neck breaking or back breaking rally. I guess you can call that. I mean, we're near the 127% extension in the German DAX. I thought we'd stop way ahead of this. Obviously, you can see all these resistance levels have been taken out. It's interesting that you get this move in the German DAX that's blowing up like this, because now Germany's looking at, the ECB, which may be cutting rates soon, which is only going to fuel fire to the German DAX rallying at this stage. So 17,000 seems entirely possible with the German DAX. Also, you should take a look at let's take a look at the CAC40 really quick, and also the FTSE, because I think those are markets that we should be looking at, especially as, you got the German DAX rallying. Let's see, CAC40, let's pull that one up. CAC40's, I mean, look at that. And that index is nearing its, I guess these would be all-time highs, right? Yeah, I guess it is. So you can see it rallying towards all-time highs. I did take a look at the FTSE at the end of the week this last week, and I think I can pull it up here. Yeah, I mean, look, we got this wedge, so perhaps a break above 7,600 in the FTSE. We're pushing right into the 200 DMA. That could be pretty bullish. So, you look at other European markets, and everything's kind of setting up for a bullish move, right? Now, there's one market that isn't, and it's the Nikkei. Now, this is interesting. We see in the Nikkei actually reverse again from these highs. You could argue that we have a nice, double, triple top up here. The risk is if you have, no pushback from the BOJ and UEDA, there's a risk that, you can see some of these European markets and maybe even the US markets continue to rally, and you can see money being pulled away from Japan, because Japan has been thinking, oh, look, easy money policy, let's just continue to buy the Nikkei. But if the BOJ follows through with, normalizing rates at the beginning of this next year, you're probably going to see that Nikkei really slump back below the 200 DMA, and then we're at risk of, breaking below, these levels of support, which would be quite bearish, in my opinion, if you're talking the Nikkei. A couple other things that we should mention this week before we get into like the S&P and what's happening with our major markets is, let's take a look at gold. Gold was our setup last week, talking about the possibly breaking into new highs and maybe even suggesting a reversal from up here. Well, we gapped higher and we reversed. We are now below. Let me just show you this really quick. I got to delete this for you, and I'm going to delete this for you. I want to talk about the break of the 38% retracement. Now, if you're looking at ICE data, if you're looking at Forex.com's data, which we are right now, if you look at most European brokers, that 2150 level, those highs, we were there, and everybody's registering it. So the problem is now we're back below the 38% retracement, which now suggests that there is a false breakout above these highs, and that's bearish. Now, if you think about everything that we're dealing with this week, if the dollar does rally because the Fed is less dovish than expected, the dollar is going to rally. Gold's probably going to continue lower, and it's going to start to really, weigh on traders that are long, because it is a false breakout. And that's the one thing that we need to be cognizant of. Being a false breakout, triggering all those, anybody who was short, they got stopped out. Yeah, move back below the 200 DMA over here at 1950. That'd be a pretty bearish event. All right, so one last thing I want to go over before we continue on. I just want to cover the broad markets, the S&P. I gave you guys that the setup that, yeah, if we start breaking below 4,400, and this kind of goes into the going into the best setups and reviewing the best setups. But last week I talked about underperformance of the markets. Well, everybody's underperformance from funds, right? You're fine as long as you don't break down. If you look every day of the week, you can see right at the very bottom, myself and the rest of the Forex analytics community, we go through all of these big instruments. We find the key levels so we know where to trade off of. We do it every day, freshen up the bias chart every single day. Every day of this last week, we have typed in 42.35 with an asterisk, or just typed in 42.35. We knew that this is critical support. While we're above this 45, 35 level right through here, there's no reason to be bearish. If we break below that, it is bearish. Okay, so just keep that in mind as we go into this next week, because it's going to matter. You could see some of the air come out of this balloon if we start breaking below 45.35, and especially like 4,500. So just keep that in mind. All right, so let's review. And this is the time that I want to review. The best setups from last week that we talked about, and then we're going to go into the best setups going into this week, in my opinion. Okay, so one of the things that we talked about last week was the 10-year and the 10-year bond market going to the 200 DMA. Well, last week we were here. You can see right here, right? Last week we were right here when I filmed this, 7 days ago or 8 days ago. We got within a sneeze of the 200 DMA. So you can see that is really key resistance moving forward. So I'd say, yeah, we pretty much got there. There are a few things that that work when you get really close, and one of them happens to be the markets. There's horseshoes, hand grenades, and technical analysis. If you get close, it still works, right? So we got really close to that 200 DMA. Last week, we also talked about the euro dollar. We talked about it being a bearish outside week. We should see a continuation lower. Well, if you look at last week's chart, I was focused on the euro short all last week. If you listen to any of our free shows, you knew that. And I was short a lot of euro dollar last week. And it worked out really well. So I would call that one a win. We also said gold would be make it or break it. And boy, I'll tell you what, it was a break it. We rallied, gapped up, over like it was like 2130. When the quote started, we moved and reversed, and I'm going to say it's a break it week. So I said last week it's a make or break, and this week I think we got to be on the lookout for some downside follow through. So I think those setups were great from last week. Hopefully you did well with them. And let's talk about the setups for this week. So my first setup for you guys this week is going to be the Aussie Kiwi. Now I'm already long the Aussie Kiwi, but with the data that's coming out, let's pull up the Aussie Kiwi. I don't know why it's not here, so I'm going to go ahead and add it really quick. And we are going to just do this from scratch because I don't think I've drawn anything on this chart. Let's delete this. Okay. Aussie Kiwi. I talked about this on the trade-off last week, but I think you can continue to play this one to the long side. Okay, this is a weekly chart. Okay, I just want to make sure I was straight here. Okay, that is COVID lockdown lows. You see that? If you draw a trend line all the way across the lows, you can see that we're basically developing some sort of triangle consolidation on a weekly chart. Daily chart, we've already started to reverse here. That reversed, I believe, off an 88% retracement. This is what we call a Gartley pattern. Let me draw it out for you. Right? It's a reversal. Some of you might call it a little bit differently. Maybe you might say, "Oh, well, no, Blake, that's a crab." It's a harmonic pattern. It's developing, and I believe that we can rally towards the 200 DMA. So I'm looking for the Aussie Kiwi long, buy it on dips. I'm already long. I wouldn't mind adding to it here at all. So that's going to be setup number one. And again, you have no central banks, but remember on Thursday after the FOMC, you'll have Aussie employment and New Zealand GDP. Okay, so those are the data points that could really move the Aussie Kiwi this next week. Next would be dollar yen. I believe we can focus on the dollar yen to the short side while we are trading below 146. So you see this previous support right here. That's previous channel support. While we're trading below 146, I believe we can focus that on the short side. Now, my third setup, but there's going to be 3 or 4. So just bear with me. And by the way, if you guys like these setups, thumbs up, subscribe to the channel down below. Hit the bell icon too if you're on YouTube, so this way you're notified as soon as these videos come out on YouTube. As soon as they come out. You don't even want to wait for the newsletter that we send out. As soon as we publish it on YouTube, boom, you're notified. Bing, goes to your mobile device. Click the bell icon down there. All right. My third and possibly fourth setup is the US dollar Mexican peso long if we get above the 200 DMA. So now you might say, oh, well, what's the fourth? Well, the fourth would be the Mexican. It's not on here, so I'm going to have to pull it up separately. The Mexican peso Japanese yen. And I'll just show it to you guys. And let me delete this here real quick. If we drop below the 200 DMA, which is also horizontal support here, then you have a big double top in play. So if you can play the Mexican peso Japanese yen, there are some brokers that will not offer this to you. So, just realize that. But if you break below that 200 DMA, then you have a double top, right? So Mexican peso Japanese yen, really big deal this week, especially with Banxico also meeting. If Banxico comes in, like I mentioned earlier, if Banxico comes in dovish, you could really see a breakdown in the peso this week. All right. So guys, gals, my name is Blake Morrow. You've been listening to the week ahead video. If you like this video, make sure you please, thumbs up would be great. Jump in the comments down below if there's something that you're looking at, or maybe that I didn't see, or maybe there's, maybe there's some economic data that's coming out that I should be paying attention to. Like, on Tuesday, Mexico's, has their industrial production numbers as well. Maybe that's going to move the market. Hey, jump in the comments down below and mention it. If not, I will see you on Monday morning on the F.A.C.E show. I'll see you there. It's a free show, so I'll see you there. Bye-bye. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.